overview of filling in the personal income and expenses sheet that we provide to our financial planning customers. So obviously the reason we need to do this is to collect information of what customers' income and expenses are, so we're able to advise on different aspects. So the first thing to look at is the income. So this spreadsheet has 3 sheets. So it has income, expenses, and balances. You can select the buttons there. If they don't work, you can select the tabs, the sheets on the bottom, by going down to the bottom and clicking the 3 different sheets. And what we want to do in each one is include the different numbers involved with them. So the first one is to fill in our income. So as you can see from this one that I've done here, so I've put in my PAYE income, any income from self-employment, say Debbie's PAYE income, and then say Debbie's income from any self-employment that she has. These are the net figures, so the after-tax figures. If you need help, and obviously if you have PAYE income, that net figure will be on your payslip. If you're self-employed and need help figuring that out, just let me know and I'll help you do it. So we fill those in to basically give our totals then of what our income for each month is and what the year is and the average. The next bit is the one that takes the most amount of time, is the expenses. So again, what I've done here is created categories that are kind of common ones that people use. But you can rename these as much as you want and change them around. So I've tried to sort of cover most aspects of it. But you can say, like our car, I pay the insurance in December, I get the car serviced in August, I spend €90 every month on diesel, say tax and NCT's in July, taxes paid in August. The next one then, say for Christmas and birthdays, so anybody that you have birthdays in the month that falls in, and then obviously Christmas. If you want, you can use the note feature here to actually put in the sort of the name of whose birthday it is, but you can just put in the sort of the average, the amount that you're going to use. Clothing and footwear, holidays, I normally put in sort of the amount that it will be in the month that it falls. You can do what your monthly grocery bill is. Then insurance, if you've sort of any life cover, mortgage protection, medical insurance, medical bills. So I've tried to get a sort of a cover of these going down. If you pay rent, include your rent here. If you have a mortgage, mortgages are filled in below. So that what you're trying to do is kind of is just get a good kind of grasp of where money is being spent. Okay, and you can do that as well as you can add to these if you want. I've left more gaps for people to fill in. So there's one I filled in where we have pet insurance and the amount that it is. And again, what happens then is that this totals for us on the top. Then if you make pension contributions, put the monthly pension contribution in, or again, if you're self-employed and you make an annual pension contribution, just put in the month where you put that contribution in. Again, if you do any regular savings or investment where you put a minimum amount in, include that in. And then the last bit then is for any loans that you pay. So again, if you have a mortgage, if you've you might have a second mortgage, if you have an investment property of some kind, if you have a credit card balance and you pay a certain amount off your credit card, if you have a car loan or personal loans or any other kind. So that's kind of then the money going out the door effectively. Then the last one that we look at is our balances. Okay, the main balances we look at are 2 different things. It's our savings balances. So where you might have a fixed interest savings account, the balance that's in it, the interest that you're getting on it, and the end date that it is. Say it's just a savings account. There's balance in it. It's a regular bank account. Interest rate is non-existent, but there's no end date on it. say if we have a regular savings investment where we're putting in say €200 a month, what the balance is at the moment, what the interest that you've managed to get on it is, and the end date for it. In most cases, like a regular savings product will have, if it's a state savings, there'll be a date before you can kind of access it. And the same thing with like any sort of regular savings product, there'll be a date, normally sort of at least sort of 3 to 5 years after the setup, that before it's really viable to take money out of it. Same thing then, say with a lump sum savings account, the balances in it, the interest on it, that kind of thing, and obviously any other savings then. Then for your loans, then if you have a mortgage, the remainder that's on the mortgage, the interest rate that you're paying, and then the expected sort of end date of when that term sort of ends. So that's really it. Again, with all of it, it's to get this, is to just get it as much detail as you can into it, but don't worry too much about it being perfect, but just as much detail as you can. Okay, that's great. Thank you.